I suppose it's one of those health check moments that we look to people like you to tell us just how strong Europe is. Looking at some of the data, the European Economic Commission sentiment indicator is the highest that it's been since the eve of the crisis. How strong is the recovery, in your view, in Europe?
Well, indeed, economic recovery in Europe is continuing, so we're expecting over 2% growth for this year and next. Unemployment is going down. Employment is at the highest level ever. Both budget deficit and public debt levels are gradually going down. So what we need to focus now, basically today we are reconfirming our economic policy priorities of boosting investment, supporting structural reforms to strengthen competitiveness, and responsible fiscal policies. And we are putting a bigger emphasis to ensure that economic recovery, economic growth is inclusive, so that benefits of economic growth reach all citizens.
So which countries are you concerned with that as the backdrop, Vice President? Which countries are you concerned about? Italian media is reporting that the EU will call on Italy for a budget adjustment of €5 billion in 2018. Is that the case?
Well, first of all, it's worth noting when we are discussing the economic performance, all 28 EU member states are back to the economic growth. Then when we discuss fiscal performance, we had done the assessment, and today we are publishing opinions on member states' draft budgetary plans. And indeed, in case of Italy, it's one of the countries where we see the risk of non-compliance with the requirements of Stability and Growth Pact.
You say it's one of the countries that you see with non-compliance. Just how off-kilter, how offbeat might they be, and who else is at risk on the at-risk list, Vice President?
Well, there are several countries. I cannot pre-announce our European semester package right now because we'll be coming with detailed opinions on all euro area member states' budgets later today. But I can say that indeed there are several countries which we deem at risk of non-compliance, and therefore call on those countries to do the necessary fiscal measures to bring their budgets in line with Stability and Growth Pact.
I know you don't want to, we won't go through asking you about all of them, but I've just noticed some reporting over in Spain that suggests the EU is going to warn Spain that it may need to do more cutbacks. Is Spain another country you're concerned about?
Well, as regards Spain, it's worth noting that Spain is one of the countries which is still in excessive deficit procedure. So what's expected in Spain in this case that they do a timely correction of excessive deficit, and this is foreseen for next year. Also, there are two further countries which are still in excessive deficit, which is France and UK. In case of UK, we are actually seeing that excessive deficit is being corrected. So this will leave us with only two countries having budget deficits still above 3% of GDP, Spain and France. And in case of France, they have to correct excessive deficit already this year.
Let's just pick up on the French theme. Obviously, Mr. Macron is new to his political chair and has a big agenda. Do you think his economic reforms are enough, or are you going to expect him to do more? He's already made, some would say, quite a good start, but do you expect him to have to do more?
Well, indeed, we see that the new French government has been very ambitious in terms of its reform agenda, and we think it's a right way so that you start doing reforms in a front-loaded way, so doing bulk of reforms early in the mandate, and we see that's exactly the approach which President Macron administration is currently taking. already announced. There are a number of reform packages on labor market, on improving business environment, and we welcome those reforms.
President Macron has also called for economic convergence with eastern members of the EU. Is that a priority?
Well, indeed, it's a priority, and earlier next month, on 6th of December, European Commission will come forward with proposals as regards deepening our economic and monetary union and restarting the process of convergence among member states is going to be one of the priority work directions of this deepening of EMU package. So there, I would say, our views are broadly aligned.
Vice President, can I ask you, obviously Germany is now in a political vacuum. There could be more elections, or there could be the expediency of a former alliance with the SPD for Chancellor Merkel. Either way, one has perhaps got to conclude we have perhaps a reduced Chancellor, a reduced strength in Germany. Could that hold back reform within Europe? Is that a risk that you are now considering?
Well, in any case, from a European Commission perspective, we are moving forward with the preparation of our proposals as regards deepening economic and monetary union, well, as regards our economic governance. And it's worth noting that the European Union is a union of 28 democracies, so there are always elections somewhere, there's always coalition building somewhere, it's not always goes smoothly, and this is something which we need to live with in the European Union, and it doesn't mean that our work is therefore stopping.
On the subject of Brexit, we might see the relocation of some clearing businesses, and some investors are concerned about higher costs of raising money for EU-based businesses. Is this something that concerns you, the higher cost of funding for European business?
Of course, we are still not in the stage of Brexit negotiations where we are discussing our future relations. We are still discussing first set of issues of citizens' rights, budgetary settlement, Irish border, and only then we can start discussing our future relations. And I would say the question how it's going to impact business in EU and UK is going to be part of those negotiations. But in any case, it's clear that with the Brexit model which UK has chosen, meaning leaving also EU single market, this means that financial institutions based in UK will lose their EU passports, so they will need to rely on other forms to continue to provide business in EU.